It's a huge day today. It's a huge day today, and the markets are responding because today is the first time in 3 years that the Fed will actually raise interest rates. Yeah, and the market's responding. You got Bitcoin responding, 40,700. Bitcoin has been acting like a stable coin. It's finally responding, 40,828. And it's not actually only Bitcoin. It's kind of all the markets. The S&P 500 is up 1.8%. The Dow Jones, 1.45%. The NASDAQ up 3%, and it was up 3% yesterday. So what the markets were scared of, which was how Powell will respond, is exactly what the markets are reacting to. Today is all about interest rates and how they're going to affect your portfolio. We're going to analyze what Jerome Powell's thinking. We're going to analyze how that's going to impact Bitcoin and how that's going to impact a whole lot of altcoins. And then we've got some other big stuff for you. Huge, huge, huge stuff. So it's going to be a massive, massive, massive show. I don't care what you guys think. Let's get out of bed.
Get the fuck out of bed, bitch. Go. Get up, get the guy go. Time to wake up, bitch, get up. Get up, get up.
Okay, wakey, wakey, rise and shine. I'm talking to you, because Bitcoin's done exactly that. And what we're seeing now is we've seen Bitcoin breaking out of the big trend. So you saw Bitcoin breaking out of this big trend line. You had the perfect retest. I mean, it literally just touched the trend line. And now we've got this new trend line that's forming, and you see Bitcoin for the first time now breaking out of this trend line at $41,000. So today's going to be a big day. Today's going to be a big, 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 big day. So for those of you who don't like our intro, who say that the intro is too long, well, sorry, because today we are going to be getting out of bed. We're going to be energized. Alrighty, welcome back, guys. Good to see you all. If you're new to our channel, subscribe to our channel, like this content. That's what tells the YouTube algorithm that we're here and we're doing a great show. And today we want to get people here because today we've got a massive show for you. So first of all, we've got Gareth Soloway coming onto the show. Freddie, what time is Gareth coming on, buddy? 10:45 a.m. EST. Gareth's coming on the show. So right now, Gareth's trading the market opening. He's coming on the show. We're going to talk about Powell and the interest rate decision, which is happening today. We kind of know what the interest rate decision is, but we don't know how it's going to affect markets, and that's what we're going to be speaking about today. I've got some real scoop there. We're going to look at markets that are recovering. We're going to look at which altcoins are recovering and why they're recovering, and then how to position yourself perfectly for an altcoin recovery. Did we update the portfolios? Are they uploaded? Amazing. So we're going to talk about some of our portfolios and what you should be topping up on. So it's going to be a massive show, and then don't forget that we're going to be doing our giveaways. We told you yesterday that we're going to be doing giveaways, and we told you guys where to get the giveaways. You get the giveaways right here on the Crypto Banter website, best crypto website in the whole world. Today there's some amazing stories on the website. Remember, it's a cool website because all you do is you just sign in with Twitter, and then whoever you are on Twitter, you become on our website, and you can see that you've got stories out there today. We'll talk to you about the stories that are out here today. I see there was a lot of engagement yesterday. The stories yesterday were amazing. If you didn't read the story about how to make money in crypto, you're seriously missing out, because it's one of the best stories that I've ever seen. And today we'll pick some winners. So, some winners in the comments. They'll be getting those Fantom Go NFTs. Alrighty, let's do this. You said you wanted short intros. I kept it under 4 minutes. Let's get the show on the road. All right, let's go. So, Bitcoin. What the hell is that? Okay, Bitcoin, 41,000, hovering around 41,000. It's a big day. We've had Bitcoin recovering. And if you saw the kind of recovery that we had, and I want to try and get you guys to show you guys the recovery that we had a very strange recovery. We had a recovery where we had this green wick yesterday. So Bitcoin was trading at like 38, 39,000. And then we had this huge green wick, which took Bitcoin to about 41,700. There was speculation that this wick here was actually caused by the Terra Foundation, TFG, or Do Kwon actually buying Bitcoin. Now, I saw a tweet from him, which was a bit later, where he said Bitcoin. I don't think that he was the one buying it, but I do think that he's an absolute genius. And I'll tell you why I think that Do Kwon is an absolute genius. Because for years, we've always had this war between Bitcoin and altcoins. So the Bitcoin maximalists see Bitcoin as the be-all and end-all, and they can't see past altcoins. And there are still a lot of these Bitcoin maximalists. And even when you've got Ethereum, most of these Bitcoin maximalists despise Ethereum, can't get their heads around Ethereum, and any other altcoin is actually a shitcoin. But Do Kwon has actually been pretty smart, because what he's done, he's created a treasury which is denominated in Bitcoin. And he's now become, I think, probably the biggest buyer in the market of Bitcoin. So you've got the treasury buying about $1.5 billion worth of Bitcoin. They said, let's get Do on the show. I reached out to Do yesterday. He said he's not doing media for a while. But so speculation is that Do did this using his $1.5 billion. Now, regardless of whether or not he did it, he's a genius, because now, because he has become the new Michael Saylor, because he's the guy buying Bitcoin to fund his treasury, he's the guy burning his altcoin reserves to buy Bitcoin, he's become the new Michael Saylor. So now you have a head of an altcoin becoming the new Michael Saylor, and he's garnering the support of the Bitcoin maximalists, because what the Bitcoin maximalists are seeing, they're seeing an altcoin that's actually backing itself up to a large proportion with Bitcoin, and is now the biggest Bitcoin buyer on the market. So genius PR stunt by Do Kwon, not only a PR stunt, but it is actually the safest way to maintain the lunar peg going forward in the long term. So genius move. I think we've seen through that move. I think a genius move. Anyway, Bitcoin is not the only market that's recovering. We spoke yesterday. I don't know if you remember yesterday, but I showed you this. And I said to you that what we had here was we had the Chinese stocks having a massive correction, like a stupid correction. And China markets were melting. And I said to you that there was a big concern, because if the Chinese tech stocks continue to capitulate like this, like Baidu went down 58%, and Didi went down 87%, and Alibaba went down 66%. If that happens, and then you have the real estate sector of China imploding with Evergrande, and then you have COVID lockdowns, and you combine all of that, then it could be a massive issue for China. But then something happened today. And if you look at the Hong Kong Stock Exchange, you look at the index for the Hong Kong Stock Exchange, which is there, the Hong Kong Stock Exchange went up 9% today. In one day, the Hong Kong Stock Exchange went up 9% after we spoke about this yesterday. These are just some of the tech stock moves that happened today in the Hong Kong Stock Exchange. So 40% up for GDS Holdings, 20% for Alibaba, Bilibili, don't know what Bilibili does, but they're up 31%. And you can see that these things keep going up. Now, look at the worst performing stocks. So even their worst performing stocks are actually in the green. The top of their worst performing stocks is up 11% today. That's like Fred's altcoin portfolio, basically. That's like your altcoin portfolio today, right? Okay, so you've got the Hong Kong stock market recovering, the Chinese stock market recovering. Why is this stock market recovering? That's because the Chinese government basically came out and said a few things. They said that in a statement briefly carried out by state media, China's top financial policy body vowed to ensure stability in capital markets, support overseas stock listings, revolve risks around property developers, and complete the crackdown on big tech as soon as possible. So now you're seeing China saying, look, we're going to do whatever it takes to actually make things better and make China more investable, because for a while, China hasn't been investable. China has been clamping down on tech stocks. And when China clamps down on stocks and on tech stocks, it's a big problem. And that's what took Baidu and Tencent and all of those tech stocks to basically into altcoin territory. And now China's come out and said, look, we'll fix this. We'll make it work. We'll print money. There's a big expectation that money is going to be printed now, and they're going to start with stimulus again, and they're going to start stimulating the economy because of the COVID lockdowns that they're now doing. So more money printing in China. We'll talk about that in a second. All right, what else? We've got to talk about what's going on today. What would the Fed do? It's not what would the Fed do. It's what would the Fed do. Okay, so I think we've got to talk about this because it's the first time in 3 years that markets are potentially, or the Fed is going to increase interest rates. And I guess it's not even potentially, because the Fed is going to increase interest rates. The market is pricing in a 96.3% probability that the interest rates are going to be up between 25 and 50 basis points, and a 3.7% probability that's going between 50 and 75. Yesterday it was about 98 to about 1.5. So some people still deflected, which means that there are a very small percentage of people that are expecting a bigger than 25 basis point rate hike today. I think 25 basis points is in the bag. I think the Fed really can't do anything else but raise 25 basis points. What's important, though, is not the 25 basis point raise. What's important is the speech that happens afterwards. Now, that happens in about 5 hours. I'd say in about 5 hours from now, depending on what your time zone is, it's 5 hours from now. Well, regardless of what your time zone is, it's 5 hours from now. 3.5 hours from now? No, it's not.
8 p.m. Yeah.
Okay, 3.5 hours from now, Fred's saying. That's when Powell's speaking. Really?
2 p.m. EST or 6 p.m. UTC.
Okay, so 3.5 hours from now, Powell's going to come out and he's going to speak. The decision means nothing. Whether they increase interest rates by 25 basis points or 50 basis points, we kind of know they're going to increase it by 25 basis points. What's important is the guidance that they give afterwards. That is what is important. And that's what everybody's going to be listening out for. Now, the markets have kind of preempted it. So markets have kind of preempted it. And you can see that, as I said, the NASDAQ is up 3%. The Dow Jones is up 1.5%. Bitcoin is up 4.5%. So markets are pretty much preempting what the Fed is going to do. But let's try and preempt what the Fed is going to say. Let's preempt what the Fed is going to say. So what the Fed could say, the Fed or Jerome Powell really has 3 scenarios of what he could say. So option number 1, he raises interest rates by 25 basis points and comes out and signals more than 5 or less than 5 additional rate hikes this year. So that's option 1. He says, look, we're going to increase by 25 basis points and we'll increase by 5 or less additional rate hikes this year. Option 1. Option 2, raise by 25 basis points and be extremely vague and say, look, raise by 25 basis points, but we'll see what happens in the rest of the year before we determine our course of action. The third option is that he raises 25 basis points and he signals that the Fed is going to do everything to stop inflation. I know that sounds crazy. I know that sounds like a career limiting move, but we're going to talk about why that move actually may be an option today. I suspect that he's going with option 2 because option 2 leaves him the most leeway. And if he does go with option 2, then probably markets run on the back of that decision. And when markets run, probably Bitcoin runs on the back of that decision. So let's watch. He's got 3 options. Let's watch which option he goes with. More importantly is there's an article that was written by Alex Damash from Harvard and Lawrence Summers. For those of you who don't know who Lawrence Summers is, he was the ex-Treasury Secretary. So he is now, he was where Janet Yellen is now. And he is now the dean, I think, or one of the deans at Harvard University. And they wrote an article around the probability of inflation, the probability of a recession in the States. And in the analysis, we find out that given the current inflation of nearly 8% and unemployment below 4%, historical evidence suggests a very substantial likelihood of a recession over the next 1 to 2 years. So these are very smart people, one of them which has worked in the Fed, and the other one, or in the Treasury Secretary, and the other one is a Harvard professor. Both of them are now Harvard professors. And they say that given where we're at with inflation and unemployment, we are now getting to a position where it's going to be very, very hard for the Fed to engineer a soft landing from a recession. Why? So he says, low levels of unemployment and high inflation are both strong predictors of future recessions. Since 1955, there has never been a quarter with inflation above 4% and unemployment under 5% that was not followed by a recession within the next 2 years. Okay, so that's since 1955. It's never happened before. We use a simple model, a simple probit model with quarterly unemployment, and they put it into the model and say, given the historical data, we believe that the likelihood that the Fed can achieve a soft landing without pushing the economy into recession is fairly low. So it's kind of saying, look, regardless of what Jerome Powell does today, basically it's too late. The Fed responded too late. And because the Fed responded too late, they are now facing a recession regardless of what happens. So it's a really intriguing situation. Let's take a deeper look into the situation. So there is a whole article about this. One of the best articles that I've read. One of the best articles that I've ever read. The article is called "The Fed is Charting a Course to Stagflation and Recession." And he talks about, he basically says that the Fed is hoping that they can engineer a soft landing where inflation returns to 2% and the economy remains strong without an increase in unemployment. And even though he says anything's possible, he says the Fed's current trajectory is definitely on track to cause a recession. He says he believes that the Fed has not internalized the magnitude of its error in the past year. It is operating with an inappropriate and dangerous framework and needs to take far stronger action to support price stability. So he says, a year ago, the Fed thought inflation would be 2% for the next year. 6 months ago, it was expressing optimism that inflation was transitory. 2 weeks ago, it was still buying mortgage-backed securities, even as house prices had increased by more than 20%. And no explanation has been offered for these errors, nor is there any suggestion that the Fed forecasting procedures and that the same personnel that produced them will change. So he's kind of going, look, you've messed up so bad, and there's nothing to say that you guys are going to change your ways. I'm going to skip a little bit forward in the article. I do suggest that you go and read this article. But he says here that, first, price stability is essential for sustained maximum employment, while overheating of the economy leads to stagflation and higher levels of wage unemployment through time. Second, there can be no reliable progress against inflation without a substantial increase in interest rates, which means temporary increase in unemployment. Real short-term interest rates are currently lower than any point in the historical decade. They are likely to reach levels of 2 to 3% for inflation to be brought under control. With inflation running above 3%, this means that rates of 5% or more would have to happen for this to happen. And effectively, what he says here is he says the only way that the Fed can stop inflation, given the fact that we are in a Russia-Ukraine war, is by increasing interest rates very sharply and basically slowing down the economy. And if that happens, then effectively the US is going to go into a recession. Scary, scary, scary stuff. And it's not from some nobody out of nowhere. This is coming from someone who was in Janet Yellen's position. Probably did a better job than Janet Yellen. Today he is at Harvard. So that's what's happening today on the interest rate front. We will tell you later on today exactly what happened when it happens. But for now, we're expecting that. And I think ultimately for us as crypto investors, whether or not we have an increase in interest rates, if you're thinking long-term, if you're really thinking long-term, if you're investing in the technology because you really believe that crypto is about adoption and crypto is really going to change the world, then this is just temporary. And this may just bring buying opportunities if it happens. Because we're not in here for what's going to happen in the next 1 year. You got to be in here for what's going to happen in the next 5 to 6 years. And the next 5 to 6 years are going to be full of cycles where the Fed increases and reduces interest rates. It's not going to be smooth sailing. So you got to look at your time horizon. If you're a short-term trader, then you should be trading these interest rate hikes. And I think that the market's going to get what it bargained for today. And I think that when that happens, all markets are going to remain green. That's what I think is going to happen. It's all about the Fed outlook. All right, let's see what else. This chart over here is telling me that we are getting close to a peace deal. That's what this chart over here is telling me. This is the Goldman Sachs Commodity Index. And I said to you, I don't really care what happens in the mainstream media. I care about what this chart is telling me. And this chart continues to signal that peace in Ukraine is on the horizon. It's again reflected by the oil price. Oil now well under $100 a barrel, $97. Again, signaling that peace may be near. The narrative on Twitter, the Russians, Putin says, now remember, this is all posturing. This is all about public perception. And Russia is saying, we do not have any other option but to have a special military operation in Russia. We do not want to occupy Ukraine. So you're now getting Putin doing that. You're getting this news on CNBC.
All right, some news just breaking from Russia that is actually lifting stocks. The Kremlin making some comments about a possible compromise with Ukraine, including one that would allow it to keep its own army. The Kremlin saying that it is discussing the Austria-Sweden neutrality model as an option for Ukraine. And you can see right now the Dow futures are indicated up by about 376 points. The stocks jumped about 70 or so points on the Dow futures.
So there's, in the Western news, you're getting the narrative that we are getting closer to peace. And then it's being confirmed by the Ukrainian president.
І працювати кожному на своєму місці, кожному, в тому числі нашим представникам, нашій делегації у переговорах з Російською Федерацією. Це важливо. Складно, але важливо, тому що будь-яка війна завершується угодою. Зустрічі тривають. Як мені доповідають, позиції на переговорах звучать вже реалістичніше. Проте ще необхідний час, щоб рішення були в інтересах саме України.
All right, so he's saying, look,
І працювати кожному на своєму.
He's saying, look, we're on the right track, we're on the right trajectory, but we need time. These things are going to take time. So you're getting, where have I gone to? You are getting there we go. You are getting confirmation of what I'm seeing on the charts. And I said to you, for me, nothing matters. Whatever we read in the news doesn't really matter for me anymore, because ultimately it's what's happening in the commodities charts and what's happening in the oil charts. And if you look at the oil charts are telling you a much bigger story. So that's the commodities chart. That's the S&P Goldman Sachs Commodity Index. And you can see it's gone up and now it's starting to correct. But the real alpha may actually be in this oil chart and what's happening behind this oil chart. So this is where it gets really interesting. Now, I want to show you this. Russian minister said they are considering making the US dollar illegal. So you're now seeing Russia saying, look, we're considering making the US dollar illegal. And if you look at the oil chart and you combine it with statements like this, and then the news that Saudi Arabia, which is one of the biggest oil exporters in the world, is considering selling its oil to China and denominating all those sales not in the US dollar anymore. And so I'm not the one who likes to ride these narratives, because then you sound like Michael Saylor. And I don't want to sound like I'm drunk on Michael Saylor juice. But if you start banging, if you're calling for this, change in narrative and change in the world order and world currencies are going to be collapsing, then you do sound like you've drunk too much Michael Saylor juice. But there is an article today. I think it's out. Is it out on the website, Freddie?
You're referring to?
The one about the dollar and the end of the dollar. Okay.
Yes.
Okay, so there is an article today. Oh, it looks very nice. There it is. That's the article. And I think it's worth a read. Now, again, we're not these sensationalists that are telling you that, the US dollar is coming to an end and it's the end of the order and, well, it's all falling apart. Because these things take years. But I do think we have to look at what's happening out there. So you got Russia making the dollar as illegal tender. So they're talking about making the dollar illegal. You got Saudi Arabia saying, look, we're considering selling our oil to China and denominating all sales of our oil. And remember, Saudi Arabia is, I think, one of the biggest exporters of oil. And China is one of the biggest. China is the biggest buyer of oil. China buys more than 25% of its oil that Saudi Arabia exports. And China buys more than 45% of the oil that Russia exports. Two of the largest exporters of oil in the world are shifting away from the US dollar for these transactions. So they're not going to be denominating their transactions in US dollars anymore. Again, Russia export to China has been de-dollarized. So you're talking about a lot of these countries, and they're not small countries. This is not El Salvador. These are real countries: Russia, China, maybe India, maybe Saudi Arabia, which is the biggest oil producer in the world, all saying, look, we're moving away from the dollar. We are now starting to de-dollarize ourselves. Russia and Belarus abandoned the US dollar for all transactions. Then you got Robert Kiyosaki, and he comes out and he wrote the book, Rich Dad Poor Dad. He says, the end of the US dollar, Saudi Arabia just agreed to sell China oil and trade in Chinese yuan, not the US dollar, which gives the US dollar less power. So that is what we're seeing there. Now, this correlates with something that Ray Dalio has been talking about. And he talks about how every couple of years, how many years it is? Every 80 years. It's every 80 years, right? He says, every 80 years, we change our financial system, basically. So we started off with the Dutch financial system. We then went to the British financial system. Now we're on the US financial system. He's kind of talking about maybe the rise of the China financial system. And he made an amazing YouTube documentary about it. You can see that documentary has got 6.1 million views already. 6.1 million views in 13 days. You got to watch it. It's a 43-minute documentary. Trust me, just go watch it. It'll open your eyes with real facts, not sensationalism. Now, look, the dollar is still king. 60% of all foreign transactions or share of US dollar as global reserve currency. So 60% of global reserve currency is still US dollars, but it is declining. And now what we're seeing is a situation where it may decline even faster because of this war. It may actually decline a lot faster. So you take the war in Ukraine, and then you take COVID, and you take inflation and the devaluing of the dollar, and you put all of these things together. And what do you get? Well, maybe this is going to happen much quicker than we think. And whereas traditionally, we've had no option but to move to currencies and financial systems which are driven by countries, maybe this time will be different. Maybe this time it doesn't have to be the Chinese financial system. Maybe it becomes an algorithm or an algorithmic-based financial system. Maybe. And you can't blame Joe Biden for this. Because as this tweet says, it says, the decline of the US cannot be attributed to one president. Tax cuts, wars, bailouts, and QE over decades are some of the reasons for the decline. Now, the USA has $30 trillion worth of national debt. Imagine you got $30 trillion worth of national debt on this currency that keeps devaluing and devaluing and devaluing itself. We're definitely at the end of an era. I just don't think it's going to happen as quickly as all the Bitcoin maximalists say it's going to happen. And now we're getting, what is it? He's a US Senate candidate running for president. I declare my candidacy for the US Senate. Making Bitcoin legal tender in the United States will be my primary objective on the Senate floor. So people are now talking about they're fighting elections and stuff like that by making Bitcoin legal tender. And that's why I think that we're at a point now where Bitcoin is really impossible to stop. Why is it so impossible to stop? Because you got 1 in 4 American households. Was it 1 in 4? It was 1 in 4 American households has got Bitcoin, right?
Yeah.
1 in 4 American households has got Bitcoin. And now senators are running. Senators are running with Bitcoin as or making it their primary objective is to make Bitcoin legal tender in the United States. So yeah, look, I don't want to sound like I drank too much Michael Saylor juice. I don't want to sound like that. I think Michael Saylor, I love the guy. I think what he's done for Bitcoin, I think Do Kwon is the new Michael Saylor, but the old Michael Saylor did so much for Bitcoin and is doing so much for Bitcoin. But I do think that sometimes he sounds like he's drunk on Michael Saylor juice. Okay, Marcin is asking, where's Gareth Soloway? Who else wants to know where Gareth Soloway is?
I did.
Who else? If you want to know where Gareth Soloway is, just ask. Just say, where is Gareth Soloway?
Is he late like the rest of the Banter team?
Is he late like the rest of the Banter team? Kyle. Fred, I think it's time we let Carl go.
Yeah, I agree.
Vacation time.
Carl, you're on vacation, bro. No, we love Carl. Carl's amazing. You know, in life, you mustn't surround yourself with people that have the same opinion as you. You got to surround yourself with people who have different opinions and can challenge you. Now, you know, I have a certain opinion. Fred is the extreme of that opinion. Fred is like the ultimate altcoin degen bull. And then you got Kyle. Kyle's like, he's in the El Capo of Neuer camp, right? You're always bearish, bro.
No, I've been bullish.
When were you bullish last?
He was bullish until 33.
Yeah. Anyway, who wants to know where Gareth is? I want to know where Gareth is. Anyone seen Gareth? Hold on, let's hold on a second. Let's see if we can find Gareth.
Hey. Well, hey, maybe I'm just supposed to take over. I'm not sure yet.
I thought I'd put you on the spot to just see how you respond.
Right, yeah, I was just like, oh, what's going on here?
You did well. Gareth, how are you, my friend?
I'm doing well. Thank you for having me back. It's always fun to talk.
Okay, are you bullish or bearish, Gareth?
Short-term bullish. So real short-term bullish. You got a nice little breakout here today. I'm hoping it holds. We're seeing it pull back a little bit.
No, stop.
Okay.
I can't talk to you unless I see charts. It just doesn't fit. So share charts.
No one wants to see me, just the charts here. I understand. That's what
there we go. There we go. We want to see charts, bro. Okay, there we go.
Okay.
Okay, now we can talk.
So check this out. So this is what you got short term. You got this beautiful little wedge pattern, and you're breaking out above it, right? So that's the short term bullish signal. You are pulling back just a little bit from the highs today. So the one thing we don't want to see is we don't want to see by the daily close it be back inside of this range, right? So we just want to see it close above that trend line. As long as that happens, then I do think you have a decent shot to trade back up into this range right up here, right? So you're looking at 46, 47,000 as a short-term target, maybe over the next week or two.
Gareth just said 46, 47,000, guys.
I'm buying.
All right, Karen, go on.
Did you eat your Wheaties today?
I think we've been too serious for too long, bro.
No, I like it. It makes it more fun, 100%. So anyways, short term, it is a little bullish. The longer term, or I should say the midterm, is still a little iffy to me. And again, the iffiness stems from this bigger pattern here, right? So you've had this big drop, and now you're kind of doing this sideways chop. And I do worry that if we can't get through this orange line, this is setting up a bear flag, or in spirit of bear flag choppy pattern. And that would be the concern over the next, let's say 3 to 6 months. So 1 to 2 weeks upside, I think. 3 to 6 months, that's where it gets a little trickier. You don't want to see this yellow line break. If this yellow line breaks, short-term 29,000 target, then longer term, you could head back towards that 19 to 20,000 range. So again, there's no guarantees it happens. I want to be clear on this. My job is to look at the charts and just talk about the probabilities. What's the likely scenario if A happens? What's the likely scenario if B happens? So
okay, probabilistically speaking, is are you more on the bullish case or more on the bearish case? Probabilistically speaking.
3 to 6 months out, I'm bearish. I am. I do think we need to see another flush. I do think we need to see more downside. The complacency is still in the market. You haven't seen that ultimate blood in the street, as the term is on Wall Street. That's what they talk about when it's kind of all out craziness. So I do think we ultimately break down. The chart here, and just to show this pattern, when you have a decline like this and then you start doing this kind of choppy action, it is bearish overall. So again, the probabilities, if you were to look at 1,000 charts of this formation, the probabilities show you that a majority of the time you head lower out of this range. Now, again, the way you know if it fails, and there's always a chance it doesn't play, right? Probabilities tell you that maybe 70% of the time it does this, but 30% of the time it does this. the way you know is if you can get through this line and hold above this line, then this bear flag is now failed, right? So that's really what you're watching here.
Okay, so you're saying if we can break 46 and we can, or I see that line is at around 40, what is it, 46, yeah. So
46,
if we can break,
47, yeah.
If we can break 46, then what you're saying is, and we can convincingly break 46, then you're now swinging bullish.
Yeah, then short term, you would look for the next move up. First resistance would be around 52,000. If it gets through 52,000, then you're talking about potentially, I would say 58,000 and then ultimately 68 up here. Those would be your levels on the upside. But again, as a technician, let me just say, just as a technician, I go step by step, right? So just because the 46, 47,000 breaks, I can't say, oh, we're going to new all-time highs, right? We have to then look for the next level, then the next level, then the next level. It's a very step-by-step process.
What would make you long-term bullish? So you're not listening to noise. You're just looking at charts and you're doing what your charts say, right? So what would make you long-term bullish? What would I have to do or say, or what would the chart have to say to make you long-term bullish?
Long-term. I've never been a long-term bull or bear on anything. That's the problem. Wow. So it's not chart related, but I will say this. If all of a sudden the Fed said, hey, listen, the economy is crashing, we need to go back and start printing money again, then long-term bullish. And inevitably, and let's just be clear. So Ran, midterm, I've said bearish, but long-term, I am amazingly bullish, like 500,000, $1 million target on Bitcoin. That's my long-term, right? 3 to 5 years out, I think you're well over 100,000. So I just want to be clear for people that what I trade is the short-term charts, and I have time frames, right? So very near-term bullish, mid-term bearish, long-term extremely bullish.
Okay, now let me ask you a question. So if Powell's coming out today, the market's telling you that they're expecting him to do the 25 basis point interest rate hike, and the market's telling you that he's actually going to be pretty dovish in his outlook, in his guidance. What do you think?
Well, I think the market's already telling us, right? So it's amazing how the charts coordinate, because if you look at this breakout, this is telling you that the market is anticipating a more dovish statement, which then triggers potential movement up to that line right there. So I think the charts. I always think it's important for investors to know that the charts kind of predict the outcome of news as best as they can. The reason that works is because you always have insiders and bigger money that know more than me, know more than any of us, right? So they're already positioning for the likely outcome of a stock or cryptocurrency news. So, I mean, you could be looking at Ripple, and Ripple could actually be signaling something that's coming, and you can start to look for those signals in the chart as well.
All right, I want to show you this chart over here. I know that you called the oil top. I think I called it a bit better than you. I was a little bit closer, but we both called it top. I was much better though, but we both called it. So this is telling you that a peace deal may be imminent, right? I mean, is this what you're reading into it?
Yes, I think the short-term movement down, I think, yeah, you're seeing that's an intraday chart, right? Not from the 130 level. Let me look at my chart here on WTI.
Yeah, your charts are much nicer than mine. I mean,
no, that's not necessarily true here.
I feel like a 6-year-old drawing pictures of houses with little crosses as windows. Compared when I look at your chart.
All right, bear with me here as we just go. Let's take a look. So basically, here's your daily chart, right? And I think one of the amazing things about this chart is that when we were at the highs, and I saw your call too, and it was a great call, is that everyone. What's that?
That was better than yours.
Yeah, listen, you got it. You got it. You got the #1 spot on that one. Absolutely. Are we going to compare anything else here? Oh goodness, sorry, I couldn't resist. Anyways, but
one of my sponsors on my show is 1inch, right? You do know that.
Yeah, I know.
You want to compare? I can compare sponsors with you.
We're keeping it light, right? I mean, that's what you wanted to do. Hopefully, I didn't offend anyone there. But bottom line is, when you look at oil, right, you have to kind of say, okay, when it was at 120, 130, everyone was calling for a move up, and ultimately, you have to be aware that at that point, the majority of people were extremely bullish, but the charts were actually telling you were overdone. And I'm having trouble pulling up the chart that I want here, but the bottom line is The charts on oil absolutely were telling us that there was a top here, and the emotion of the crowd, much like Bitcoin at 65 to 69,000, was telling you that it was going to reverse. They were too bullish. Everyone was too bullish. So it was a great call on your part. Absolutely.
What do you think is the future of oil for the next couple of months? How does oil look? Does oil go back down to $60, $70 a barrel? Does oil now stay up here? What happens next?
Yeah, so I think you go sideways chop for maybe a couple weeks, and then you're going lower on oil. And I'll explain why. And this is just going into why I knew that oil was going to pull back. And you probably thought the same thing, is that there was basically a no-win situation for oil. If oil stayed at $130 or $120, people were going to stop driving, which was going to reduce consumption easily by what Russia was potentially not going to be able to export, right? And then on the other side of the coin, if there is a peace deal, well, then all that oil is right back in the system. And arguably it was going to be sold to China anyway, so it was never going to be taken fully off the market. But bottom line is, it was a lose-lose for oil. The economy is going to slow, so my 6-month target on oil is probably 70 to 75 bucks.
Wow, the economy is going to slow. That means that the stock markets are going to slow, right? So you're in the camp of the markets continuing to decline, even though the Nasdaq is down 20% from its highs, right?
Yes, correct. And I want to show you this. This is a great chart. This is the S&P 500, right? Let me get rid of some of these excess trend lines.
No, that's the QQQ. That's the Nasdaq.
Go to the spiders. Thank you. All right, so here's your long-term trend on the S&P, right? So you can see the S&P up in this range. And then here was the S&P on steroids, right? And steroids, when I say that, I mean that the Federal Reserve came out, the government was sending checks to Americans, the Fed was printing unlimited amounts of money, and so you had this range, right? This huge vertical move on the S&P. You've now broken that trend, and basically the Fed has said they're going to remove that extra special price action. We know the government can't be sending checks consistently to people as well. So where are we going on the S&P? Probably right back in this range, right? We're going to go back to the longer term range on the S&P. And that's kind of what I'm expecting over the next 3 to 6 months in the S&P for us to go back in here.
Even though there's so much more money in the economy, I mean, the reason why the S&P was on steroids is because we basically we inflated prices. So you think even though that happened, you're still thinking we're going to go back into the trend line?
I do, because the Fed is now as you raise rates, what that does is it sucks money out of the system, because as rates go up, there's always some billionaire out there that says, okay, instead of investing my billions in crypto or in the stock market, I can now get 2.5% on the 10-year or something. And so they remove that money out of the system, take it out of the market, and valuations have to come in. So I do think that that's the case. I also think that inflation is going to take a huge bite out of earnings, right? I mean, you're already seeing it in prices going up. It's hard to pass that price increase right along to the consumer. So the business is probably going to have to eat that a little bit, and that'll reduce earnings as well.
I must say, I read this quote today by Lawrence Summers. It says, essentially, it talks about the Fed's approach. It says, essentially, officials switch from the Fed's traditional approach of removing the punch bowl before the party gets good to an approach of the punch bowl makes people happy. We'll remove it when we see people keeling over drunk. That's exactly what they've done now. Now they're trying to clean up the mess at the party.
Yeah. Yeah, and then they've boxed themselves in, because it was easy to say, okay, well, if we slow the economy and whatever, we can print more money when inflation was 2% or 1% or 0%. Now with 10% inflation, I mean, you can't just go back and print money. Ultimately, that's why Bitcoin is going to survive and it's going to thrive. And again, I never want people to just focus on my midterm. Yes, I think it ultimately goes lower in the midterm, but long term, it's here to stay, and it's going way, way higher because of this. The Fed is always going to have to come back and print more money.
You know what I love about you, Gareth?
What?
I love the fact that you got 8 monitors behind you. No, that's not what I love about you. You know what I really love about you is that you're willing to be a contrarian. And to be vocal about it, and no matter how many haters and hate tweets and everything else, you stick to your guns. And I think for the last couple of months, you've been right way more times than you've been wrong. You haven't been right as many times as I've been right, but you've been right a lot more than you've been wrong. But you're willing to take the contrarian view and everything that comes with it, and you're willing to really stick with it.
That's honestly, that's what you got to do in this business. And again, I basically try to tell people what I'm doing with my money. And therefore, obviously if I'm counter trend trading, I got to let people know that. So, and a great example of that was the Chinese stocks today. I don't know if you took a look at those, but I mean, literally, I was posting that was the most on Twitter. And by the way, Twitter can be a great asset for positioning your portfolio by going counter trend. But if you look at like Alibaba today, I mean, huge move up 23% on the day. I mean, these China stocks
Let's not talk about it. Let's not talk about it. I'll tell you why. Because I knew it was going to happen. I worked it out while I was doing my show yesterday, and it was too late to put in any orders. And when I woke up this morning, I missed everything.
Yeah.
I mean, what a disaster.
You know how I knew I was going to be right is yesterday I tweeted about China stocks being good, and I got so much hate. And then that's the greatest contrarian indicator in the world. You just got to go opposite. When you get maximum hate, it's like, okay, you definitely got to buy now.
That's why I called the oil top, because when Joe Biden comes out and he bans Russian oil imports, you kind of know that's as bad as it's going to get. It can't get worse. That's why I called the top, and that's why I called the top the minute he did that, and that was the top.
Yep. 100%. You were absolutely right on that one.
I want to be more like you. I sugarcoat my because of all the haters in the Twitter comments. I sugarcoat my comments, but I'm going to stop now. I'm going to say it as it is, and if they want to throw hate, then just throw hate. Just throw it. I'll take it.
I mean, listen, when you get as big as you are in the industry, it's inevitable you're going to have trolls. You just have to kind of just, it is what it is. It shows that you're doing something right. Obviously, you've made it big enough to get trolls.
But Gareth, I'm so big now that even my impersonator bots have impersonator bots.
Wait, what are we talking about again?
Goodbye, Gareth. Have a lovely day, bro.
Are we really done, or are you kicking me off now? Did I go too far again?
Never, bro. You're part of the family. Much love, bro. Chat soon.
All right, thank you so much. I'll talk to you soon.
Yeah. Who's bigger, me or Gareth?
I don't know. I don't know the answer to that question. Are you talking about the 1 inch reference or what?
Okay, that's the end of Hustle for today. I know we said we're going to keep the show shorter, but I'm not keeping the show short because I've got a lot to talk about. Freddie, I have a lot to talk about. We're going to talk about altcoins. We haven't spoken about altcoins. We have to talk about altcoins because you know why we have to talk about altcoins? Because the market yesterday, what's going on here? The market yesterday kind of gave us a signal. And it gave us a warning shot. There was a warning shot. And the warning shot basically said, for those of you who do not speak market speak, the warning shot said, make sure that your portfolio is ready for a recovery. Because I don't know if your portfolio is ready for recovery. I know my portfolio is almost ready for recovery. But the market's giving you a warning. And the warning is that if you saw what recovered yesterday, what recovered first, what recovered second, what recovered third, you would have seen that quality recovered first. Which means that is your indicator. I'm fighting again with CoinGecko, but that is your indicator. Let's try again. That is your indicator of how you should be positioning your portfolio. The stuff that you saw recovering yesterday when we had a $1,000 recovery in Bitcoin, that is the caliber and kind of stuff that your portfolio needs to be in. And if your portfolio is not in that kind of stuff, like for example, you need to be looking at two things. Is it quality and has it been oversold? If it's quality and it has been oversold, make sure that you're buying it. And we saw that yesterday. Look at the Fantom ecosystem. Okay, quality oversold, Popsicle Finance up 104% today. Quality oversold, EOS. Did you see Fantom yesterday? Did you see Tomb? Quality oversold. Those are the ones that you need to be putting your money in first because that is what's going to be leading your recovery. That is it. I'm also hearing a lot of news, not news, but I'm hearing whispers around, not that, that's a whisper that Andre Cronje may be coming back, and I've got a theory about that too. There's an ETH narrative brewing, and you know when ETH narratives brew, then you could get an alt season. Why is there an ETH narrative brewing? I'll tell you why there's an ETH narrative brewing. Because ETH 2.0 is now, the merge testnet is now happening, which means that we're one step closer to ETH 2.0. So that's happening. Very quickly, other altcoin news. People are asking why Andre Cronje is deploying and funding several new fixed Forex project pools. Because remember, he's still part of fixed Forex. He's still part. That's the one position that he actually kept because they don't have another leader. So that's the one position. Keep 3 or fixed Forex is exactly the one that he is still doing it. Then you had Zuckerberg announcing NFTs. Boring. Announcing NFTs. Boring. You do have AVAX. AVAX is exploding. I don't want to talk about Zuckerberg on the show. You got AVAX exploding in terms of wallets. Keep an eye out on AVAX. Keep watching Miles' show. Miles spoke about AVAX. Very good.
Also, I said that was the most hot gaming blockchain last week, and they've onboarded 2 projects that are going to change.
Who put Hustle in the studio?
I just added my input. You know, don't slight. Don't slight.
The AVAX, and you only.
All right. Well, you know what?
I called the AVAX gaming narrative.
Hustle do the show. Then let Hustle do the show.
All right, Red stepped away, so we'll go ahead and do the show. So, yeah, I mean, if you remember, if you were tuning into the end of the game show last week, I did say that the AVAX gaming narrative was on the way. So, you know, if you're watching any of the shows, Miles has talked about the DeFi, I've talked about the gaming, Rand talks about the wallet activity and the fundamentals. So, if you've been listening to the channel, you've definitely been on the AVAX narrative for sure.
Are you finished?
I love it.
What's in the gaming show later, bro?
We're going to talk about Dr. Disrespect bringing NFT integration into his new AAA gaming studio, which, by the way, he has 6 million cumulative followers on Twitter and YouTube. This is that wave of streamers that I've talked about, that if Twitch streamers, YouTube streamers start playing NFT integrated games, that could onboard a ton of players because, you know, gamers, they follow what the big players in the space are doing. So we'll talk about that and more.
All right. Now, can you please leave my show?
I'll exit. Bye, Rand.
Bye, Hustle. Thanks, Hustle. Just hijacked my show. Okay, let's talk about more important things. Giveaways. We said that anyone who interacts with the website is going to get a $60 giveaway, a $60 NFT. Was it for $60, right? It's worth $60? No, it's not. It's worth much more. You're going to get one of the Fantom, the Fantom. It is Fantom starter NFT, but it's not $60. It's more. You're going to get one of them. There's a whole lot of them to be given away. So we're going to just randomly just take comments from the articles of yesterday. We're going to do the same today, and we're going to select 2 or 3 today. And well, where are all the comments? Okay, there are all the comments. All right, so at random, Jordan Fulton, you're a winner. William Sue, you're a winner. And Aaron Shufton, you're a winner. Remember, if you want to win, just go to the website, interact with the website. That is where you're going to get the alpha. And there's massive alpha on this website, and it comes out first. Today's articles, lots of articles today, but the ones that you really have to read. Where did this article come from? This is a big article that I haven't seen. It is how the next mass adoption on Bitcoin. Then you've got this one you've got to read. This is the one about why the US dollar might be lights out. You've got to read that one. There's charts of the day from Sheldino Tentino. And then every day we do this thing called a morning brew, which is like, it tells you everything that's about to happen. So make sure you watch it. Okay. Also, I said I haven't given away ByBit giveaways, right? So we got to give away 1,000 BitDAO tokens, which is worth, I don't know, $1,500 to anyone who has a funded ByBit account. Now, we're going to do this now every single day. So if you don't have a ByBit account with our referral link, go and open a ByBit account with our referral link. Fund the account. Even if you funded it with $10, then I have an excuse to give you the giveaway. So the first person is account number 1834740. You are getting 1,000 BitDAO tokens. 183680002. You are getting $1,000 in BitDAO tokens. And let's give someone $2,000, 2,000 BitDAO tokens. All you need to do is you need to have a BitDAO account, a ByBit account with our referral link, fund it even with $10. Just get onto this list. Then I can give you dollars. So who's going to get $2,000? I'm going to be doing this every day. So you're going to get here. We got account number 142896003. I'm obviously not going to reveal the name. Alrighty. Then what else? What else before we go today? Before
$600.
They deposited $600.
No, the NFTs.
Oh, the NFTs are worth $600. I told you it's not 60, it's 600. So the people who won the NFTs, you basically won $600. These people have just won $4,000. Now, remember, this is going to happen every single day. If you don't have an account, open an account. Just put $10 in. I don't care. Just get onto this list. Then I can give you the giveaways. Lastly, if you don't have a VPN, we're not going to talk about this again. until tomorrow. If you're going to be in crypto, you need to have a VPN, because a VPN hides your IP address and hides where you are in the world. Now, if any person, exchange, crypto feature, every time you make a transaction, they record your IP address and they know where you are in the world, which means that hackers also know exactly where your IP address is. Now, in crypto, you really have one job. What is your one job? Your one job in crypto is to protect your crypto. Because if you land up losing your crypto, then you're an absolute asshole, okay? Don't be an asshole. Protect your crypto. The cheapest way in the world to protect your crypto, part of the basic starter kit is actually hiding your IP address. Your IP address, it's basically like lifting up your dress and showing people your panties if you show your IP address. No, it's even worse. It's like lifting up your dress, but you're not wearing panties. You know that joke? Carl, you must know that joke. The one where the little girl goes to her dad and she says, "Look, Daddy, I got $50 for lifting up my dress." And the dad said, "Just be careful, the boys don't see your panties." And he says, "Oh, don't worry, Daddy, I wasn't wearing panties." You know that joke. So that's the same thing with your IP address. You cannot, the IP address is super important. You got to hide it. How do you hide it? You go and you get a Nord VPN. Now look here. I'm not repeating myself. It costs you $3.35 a month to protect your IP address. If you're not protecting your IP address for $3.35 a month, then you should be walking in the street and lifting up your dress without wearing panties. Because then, seriously, you have no idea what you're talking. $5 a month or $3 a month, please go and sign up. There's a referral link below, just to make sure that we understand each other. If you sign up in the next week, so from today until, what day are we in today?
Wednesday.
Okay, from today until Wednesday. If you sign up between now and next Wednesday, I'm going to select one lucky winner to win $1,000. Just go and sign up and protect your crypto. You have one job, is to protect your crypto. You cannot be in this game if you lose your crypto. If you're trading without a VPN, if you're exposing your IP address, you're going to lose your crypto. I can't say nothing. Referral link below. There's a deal if you take it. The deal is you get 70% off. If you take the deal, you get 72% off. You get 72% off. All right, see you guys again tomorrow. It's going to be another fun show tomorrow. And then there's Friday. On Friday, we banter. So it's also a big show on Friday. See you guys again tomorrow. Do we have a guest tomorrow, Frederick?
Not tomorrow.
I think we do. No, there was another guest. Oh, I was trying to get Vinny on. Maybe I'm going to get Vinny on. Maybe I'll get Vinny on. See you guys again tomorrow. I'm sorry it's been a long show. Not sorry at all. Fred, I'm sorry it's been a long show. Not sorry. See you guys again tomorrow. Trade well, my friends. Fun show.
That was great.
Just long.
Support more Bitcoin. Gareth.
You're listening. Exit the markets. Fred has just bought Bitcoin. Exit.